Hello and welcome to the Weekend Investing Daily Bytes. We're shooting this episode on 25th of April, and a lackluster day at the markets today after a nice bounce yesterday. But today again it was a bit muted, although the market did close higher than the previous day, and we are still sort of in that zone where either we break out from here and go towards 18100, or do we get a waterfall event like this, which this previous peak has denied that kind of a move. So I think there's more hope that we've seen the worst of the correction since December top at 18900 or nearabouts, and that we will at least not be going down but maybe more sideways before we start an upward journey. And I think this breaking of this top, if it happens in the next few days, that will signal a good potential of an advancing move on the Nifty. Nifty heat map, Bajaj Finance and Bajaj Finserv were the two gainers in the banking and finance space. HDFC Twins losing about 1.4% and 1.1%. Pretty much the major drag on the market today was by the HDFC group. HDFC Life also down 3.25%. IT stocks quite flat. Auto stocks were also flat. Reliance moved up a bit at 0.7%. ITC up 0.7%. Bharti Airtel, Britannia, Adani Enterprise all in the green. So a bit of a muted day where not much action was happening. Also, on the sectoral front, you can see IT is the only index which actually lost ground. All other sectors gained somewhat, but real estate, metals, infra, energy, and our favorite PSU bank, these were the sectors that did the best amongst the entire market. So PSU banks, if we see, over the last 1 week, they are up 2.1%. Over the last 1 month, they are up 13.2%. Last 3 months have been flat for PSU banks, but last 12 months on the PSU banking sector is up 46.8% on this sector only. So on a 12-month basis, PSU banks up 46.8%, FMCGs up 26.6%, private banks up nearly 18%, autos up nearly 18%. So these are the four sort of sectors, and if we club the two banking sectors into one banking index, then three sectors have really moved very rapidly. And the worst performing in the last 12 months have been IT, energy, metals, and commodities. So this has been the makeup for all the sectors over the last week. Since the new financial year started, we have seen a gain of 11% on the real estate sector, 8.6% on the PSU banking, and rest all are in the single digit space, with IT losing 6% in the current financial year. Mid cap stocks remaining muted, not able to go across from yesterday's close. Small cap stocks actually doing much better than mid caps and going ahead. Small caps have now recovered from nearly 8500 to 9200 plus. So a good gain of nearly 9% here. And again, very near this resistance zone of 9250, 9260. So maybe we may have a shallow correction and then create a inverse head and shoulders pattern perhaps, or we may continue to chug upwards on this. Nifty bank, however, has been strong, and despite the HDFC bank weakness today, which caused a sudden loss towards the second half of the day, Nifty bank still managed to close higher than the previous session and is now within reach of its all-time high on this. Rail Vikas Nigam Limited is one stock that we have been studying and invested in some of the strategies for some time. The reason that I have this chart up here is not to recommend that you should buy this stock now. Maybe it is still buyable, but we really don't know. But to essentially instill the idea that any stock or any chart which is looking, it as a textbook style chart pattern is worth taking risk at. So this was giving a flag pattern after a huge rise from 30 rupees to 81 rupees. It consolidated for 4 months. Uh, and here it was giving you the indication when it became really quiet here, and it just was along this line that something may happen. Of course, I was also not expecting a 50% gain within few days, but I did start to mention about this stock somewhere, a week earlier, that this stock does look well if you go look at my Twitter timeline. But these kind of movements are amazing, and essentially what the stock is doing is it is continuing this rally from here, and it was resting here, and once it broke out, it has taken a leap. So charts are important. Yes, charts will not give you a 100% guaranteed result. Nothing does in this world. But the probability that a stock will do well, and if the chart pattern is working like that, is very, very high. Very important to see that there is also a sort of a inverse head and shoulders pattern here with a very tight right shoulder. uh, so many observations from this chart itself. Of course, today's volume is humongous. Stock moved up 20%, so I would expect that very late comers have today, and stock may try to shake them off in the coming days. Topic for the day is think exponentially and not linearly. It's a strange topic, but just to touch upon how the usual person thinks, most of us will think very linearly in our approach. And just to jog our linear minds, I want you to quickly do this quiz. That you are given two options. You can take 25 lakh rupees now, or there is an option where you get 1 rupee in your hand today, and you are assured that for the next 25 days, every day you will be doubling your money. Which one will you pick? A linear thinking mind would obviously go for the 25 lakh rupee bounty, because even with the obvious nature of the question, what I'm trying to ask you, you probably know already that that is not the right answer. But just even if you try to imagine what would be that 1 rupee worth after 25 days, keep that figure in your mind and I'll show you the real amount. Then you can see, despite trying to think exponentially, what is the kind of impact this doubling make. So did you even have your expected figure anywhere near this figure? I did not actually when I thought about it. So most of us, because our brain is wired to think linearly, we do multiplications in school and not exponential function. We continue to think on a multiplier basis. So 1 rupee, if you double it for 25 days, becomes 3.35 crores. You will, I'm sure half of you will go to your calculators and do it, but I can assure you this is the right answer. So essentially the idea is that when you are running any system, any database, data oriented trading strategy, investment strategy, you are unable to guess what is the kind of exponential curve you will get once you start hitting what is your win rate, whatever is your win loss rate, what is your average win to loss expectation. This kind of, you know, hockey stick curve that kicks in is very difficult to imagine, almost impossible to imagine. But you don't have to imagine it, you only have to execute the process for it. And that's what is the beauty of exponential gains. So, as I said, I mean, we always like to visualize growth with straight lines, and always grows not in straight lines. Down also it will go also it can go exponentially up. It compounds, and compounding, that's why, is the eighth wonder of the world. So one very simple way of visualizing the power of compounding is the magic formula of 72. I'm sure most of you already know about it, but just to jog your memory, is magic formula of 72 is, if you know what is the growth rate of your investment, if you divide 72 by that growth rate, you will get the number of years to double your money. So if you are, let's say you have a trading strategy where your income is 36% annualized, doubling your money on a, outcome is, let's say, 8%, then 72 divided by 18, so you will be doubling your money every 4 years, and so forth. So the power of 72 is very, very unique. The other way also you can work. Let's say you want to know uh, at what rate will I double my money if I want to double it over 5 years. So then you will do 72 divided by 5, and it will give you the returns, for that period. So assuming that you achieve a CAGR of 15%, years taken to double your money will be about 4.8 years, 72 divided by 15. So essentially, it only helps us to visualize the impact of compounding, which we are in normal life not able to do in our normal course of how to look at things. So, for instance, two examples, very simple examples. Reliance went from 63 rupees to 2,373 over a period of last 23 years. This is a 37x growth over the last 23 years. Now, 37x is just a little more than, 5 times doubling. So 5 doubles across 23 years, 4.3 years for every doubling. So if you do 72 divided by 4.3, it will give you about 16.7% is your CAGR that Reliance has given you over the last 23 years. So amazing performance there. Another one could be Tata Elxsi, where it went from 38 rupees to 62.70. That's 165x growth in 20 years, and this is after it has already dropped more than 40%. Despite that, that's 165x growth in 20 years. So again, if you do the similar math, it is about 7.25 times doubling, or 2.75 years for every double. And annualized return is 72 divided by 2.75 is 26.18. So even if you don't look at all this math, etc., but I'm sure that you would, by the end of this episode, would appreciate how handicapped we are when we look at how things compound. And there are so many real life examples of this, which I can quote. And really, I mean, we cannot think of compounding when we just simply think about it. And it works on the other side also. Imagine you're losing every day, every month, every year. I mean, the kind of dramatic fall in your capital that you get because of the exponential curve on the other side. So give this concept and the power of compounding a thought, and always keep in mind that if you are going to pursue a strategy which has a established track record of performance of expected outcome from the market, yielding better than your cost of capital, better than inflation, and you just need to keep compounding it. And once you keep compounding, the desired hockey curve will kick in, and you will not be afraid of that riding that curve, because you know that you are following a plan and you're following a strategy. So thank you so much, and I will see you in another video. Bye.